panel discussion is on navigating challenges from seed to unicorn. What are the innovations that can happen in scaling? Presenting to you the moderator for our final panel discussion on this stage. She's a partner and founding member of ANB Legal, which is a firm that specializes in corporate, commercial law, private equity, venture capital, M&A and more. Presenting to you Rohini Nair. Welcome, Rohini Nair. Please take a seat. Joining her on stage, the first panelist, the managing partner at Unicorn India Ventures, which is a semi-approved venture fund, Mr. Anil Joshi. Welcome, sir. This fund is focused on investing in early stage and growth stage startups. Joining them on stage, Mr. Anurag Ramdasan. He is a partner at 314 Capital and he focuses on sourcing and supporting investments in high growth startups. Hearty welcome, Anurag. Over to you, Rohini.
Hi, good evening, everyone. We had one more panel member from Kalaari Capital, but unfortunately he wasn't well, so he had to leave. But we are joined with some seasoned venture capital people, and I think I'm glad to introduce you to Anil from Unicorn India. And congratulations on your tentative final close of 400 crore, right? That's the news isn't it? Congratulations once again. Here we have Anurag from 314. We booked a couple of your portfolio companies as well. But he's somebody who's known for nurturing startup founders and leveraging the 314 connects to help them out. Okay, so I think the objective of this panel is to understand that when a startup scales, what are the metrics that you as a fund manager look at? What is it in an early stage that you look at? Okay, fine, this particular startup has the potential to grow. What is that you look at?
You know, I think Shreyas in the previous talk covered a lot of these things, right? Look, the way we think about investing in a startup is 2 or 3 key metrics that matter to us when it's very much in the early stage. So the kind of deal, the size of the problem statement, which is something that Shreyas also emphasized. Right? It can't be a 10 million problem, it needs to be a 10 million problem, right? And is there a path to that? And lastly, what is the big differentiation, right? Why now? What really changed? When we look at super early stage companies, these are sort of the guiding factors for us because obviously when you come that early, looking at individual metrics on its own doesn't necessarily make sense. It's a bit more subjective evaluation. But then as the stages proceed, right? Because we come across different stages, the journey starts looking very, very different, right? So to give you a sense, in the market where the way the markets have trended in the last few years, we've seen companies that have shown incredible growth potential but with profitability, and that just changes the bar for what a high quality company looks like. Right? We've seen companies in the consumer space that have grown at a rate of adding a few 100,000 users a day. That completely shows what the bar looks like. So when the company progresses, obviously multiple different factors come into play, but at the core of it, it's still, the quality of the team, the potential of the outcome, and lastly, why now? What's the big differentiation?
That's very well said. Anil, do you have any thoughts on this?
I think my answer will be, not different, but let me put a different perspective. We are early stage investors, and unlike when you invest in a mature company, there is a history, there is a background, and you have something to validate and extrapolate. But when you are investing in an early stage company, for me it's a white canvas, right? You look at this beautiful, right? You can see red color and you can feel it, but when investing in an early stage company, especially 1 year, 2 year old, it's white canvas. There's a picture which is not visible. So what is important is the quality of team. I don't know how many of you remember the first unicorn of India is ANB, and it's in a co-founder, all from IIT, very glorious past, and they started with an objective to allow people to do a function of Google using SMS. I'm talking about time when the only feature phone has was SMS, and there was only one smartphone which was BlackBerry, could be used for email for elites. So they said, why can't we provide people, a power to, search something using SMS, and that's how they started a company called mCoach. Right? That's why, angels had put in, and within some time, the mobile industry changed and people started actually holding smartphone. Nobody uses SMS. Nowadays it is only, for information. And they realized the product what they are building, doesn't have a use case. And they were able to, morph it. And then they started working for retailers. So giving power to retailers using mobile on commerce. But soon they realized that phones are getting more smarter. Their technology probably may not be useful, and that's how InMobi got germinated, which is today powering most of the mobile first page ad, and they now have plans, and I heard they've launched some new products. So I think what matters is the quality of team. The investment in mCoach happened to support search using SMS. Now imagine, even if this is a large opportunity, that product is more so. I think when I'm evaluating, for me the only thing what matters is team and their ability to change to changing environment. Rest all fall in place. So that's my perspective.
Thanks, Anil. Anil, I'm told that you make a lot of investments in startups from Kerala. So therefore, Kerala is very close to your heart. Right?
Adopted son.
Yes, adopted son. That's what you told me last evening. Yes, of course. Tell me that in your mind, what is it that is missing? See, you are anyway investing, but there's so many VCs out in the market. What is it which is missing for the entrepreneurs in Kerala to really step out and attract or get the attention of the VCs outside of Kerala?
I think they are attracting, no doubt. I think it will be not fair to say that they are not able to attract.
May not be as much, but yes.
No, so see, it's a matter of also connectivity is an issue. Travel is one thing which probably is hindering to most of the people, right? Traveling to Trivandrum, less flight options, and if you don't have a reasonable portfolio, it becomes difficult for VC to come and invest in. But I think the people who are not able to attract, they probably migrate to some other place. So they are doing it. I think what Kerala Startup Mission or Kerala government has done they were the pioneer in establishing fund of fund. In fact, their fund of fund happened much before the fund of fund from central government came in. And that was the first experiment. They started with a very small token amount. We were the first recipient. And then we, started making investment. And my experience has been very good. The world average failure rate is almost around, 30 to 40% if you look at portfolio. I have no hesitation saying I have made around 15 investment in Kerala between fund 1 to now even 3. We have made 4 investments, and not a single company from Kerala has failed.
That's
I
good to
think,
know.
I think this is more about investors to look at why they are missing out Kerala. I don't think it is founders who are missing out, reaching out to investors. Let me put that way. But I think in today's connected world, that's not an issue anymore.
That's a very interesting perspective. That's my takeaway.
Also, I'll add, India is evolving today. Like nobody was talking about tech. Nobody was talking about AI, nobody was talking about education, nobody was talking about health. Now we have, vertical specific funds. Earlier it was all about consumer internet, and, by nature, most of the companies from Kerala are different. Either they're doing some hardware, look at some of the robots, roaming around outside, or go to exhibition. You will see many companies will classify it. Good part is that now we have VCs who are actually scouting for deep tech. If they have to invest in, they have to come here.
To know. In fact, this morning, Dr. Shashidharur had some interesting statistics to talk about the Kerala startup ecosystem. In fact, that's one of the largest, or from a growth perspective, it's very it's a big one. The Kerala ecosystem, the startup ecosystem. So Anurag, over to you. Do you make investments in Kerala? Have you made any so far?
Yeah, actually we have a common investor in Kerala, a company called Open, which is also first year we got out of Kerala. So, very happy with that. Look, I agree with what Anil said, right? It's still an evolution. Kerala ecosystem is just younger. I don't think anyone really looks at Kerala ecosystem and says we don't want to invest, right? That's not the case. There's a different type of companies that come out of here, and it will take its own time to find the right sort of venture investment fit into that. It will take the right kind of investors to evolve and start looking at this ecosystem more closely, and we are seeing that happen, right? I mean, across the board. One Bangalore-based VC firm has invested in a SaaS company out of Kochi called Bulljet, and they raised about 20-odd million. There are a couple of other companies from Kochi that got into Y Combinator, so stuff like that's happening. And as long as they continue to do that and they keep building that ecosystem out here, things will progress. I mean, one of the points he mentioned, right? I mean, the movie team is a very solid team. But what also happens over a period of time is that because those founding teams are good, people who have worked with them end up becoming really good and start their companies, and that's how the ecosystem grows. We are still in the first cycle of that happening in Kerala. And that compounds very quickly when it happens. Each of these organizations grow big, have hundreds of employees, out of which tens of them will quit and start their own company. And suddenly, before you know, there's just a massive buzz of venture capital investment. It'll take its time, but there's no reason for that to not happen in Kerala.
From a legal standpoint, when I work with startups, early stage, obviously they don't have the liquidity to spend on compliances, etc. So they're not really compliant. But when they are going in from an early stage to a growth stage, they're scaling. At that point in time, they need to spend that kind of money on compliances, get their house in order, etc. Apart from the legal compliance, from a business standpoint, what are the pitfalls that you actually see amongst the founders that they tend to commit, or any mistake that they commit that you think they could have overcome and perhaps that could have helped them grow faster?
Yeah, so my view is that 90% of company building is hiring the right people. Look, even if you are the founder, you are not going to be iterating on the core product time and time again. You'll have a team of product managers. You are not the one who's going out and selling the software to customers. We'll have sales. One of the big things we see as a problem in fast-growing companies is that suddenly the HR is told, okay, we need to hire 50 salespeople. And you inevitably end up hiring bad people because you have to fill a quota. The moment, I think across our portfolio, what I've seen is the moment you lose control over the quality of your hiring, outcomes come. And that's why certain places like Delhi, Bangalore, etc. have a certain inherent advantage because the per capita density of talent is higher. It's harder to go wrong when you're hiring engineers in Bangalore, whereas in other places it's a little bit more difficult, right? But if I had to pick one thing to say where companies go wrong, again, right, when you talk about compliances and stuff like that, it's the same thing. You've seen good CAs, bad CAs, good CSs, bad CSs, good lawyers, bad lawyers, right? So, one of the first things that we mentioned was when you ask, what do you look for in a company? It's the team. At growth stage is the extended team, right? It's the urban leadership, it's the teams they build up. So, the single biggest way to sort of stop screwing up is always ensure you have a high bar of the kind of employees around yourself.
People is what makes a difference. I agree with you on that. Any thoughts on that? Anything to add?
So, I think there is no excuse on compliances whether funded or not funded. It doesn't cost much. I think being an investor, we have some fiduciary responsibility, so we lay more emphasis. There are some good examples which people quote that this funded company had certain issues, but what I believe, most of the founders, miss out the importance of delegation. My definition of early stage founder is B2B, which is PO to president, meaning which you have to do everything. So you may probably be required to open the office, may be required to mop the floor, make the tea for your guests, do finance, HR, sales, right? But that's okay till then you found some ground. But as you start growing, the delegation is one, as rightly told by Anurag, you will get embedded with technical issues and not able to look at larger. Unless until you free your time, you will keep doing what you have been doing. So delegation is one. Secondly, filling right position. I think one of the most ignored position in most of the startup is the position of finance. Right? They find it difficult to hire good, CFO, and which not only delay their future outcomes, not only delay their own working capital cycles, compliances, everything. Because see, you are an engineer. Right? I cannot expect you to, being a lawyer, operate on my body. It is to be done by doctor. So engineers are supposed to, innovate, not supposed to engineer the financial numbers. Let chartered accountant or CFAs do that. I think this is one very ignored position which most of the guys lack. And the third thing, many times founders are too married to what they have built. They are unable to see, what is there. Like for example, the previous speaker rightly said that build for 2027. And if you're building for today and nobody want to have it, then there's no point fun building that, right? So I think there are the few initial things which if people take care of it, I think nothing can stop them.
Very well said. I think that's a takeaway for all the startup founders sitting here. One quick question. Apart from KSUM or Kalaari Capital doing their bit for the startup ecosystem, what other things do you think could add value to probably get the startups in Kerala to probably build themselves up?
I think it will be wrong on my part, but in many cases Kerala, happens to be the pioneer, and many states follow, what they had been doing, whether in terms of policy or the activity they look up, But I think the exposure is one which makes a lot of difference, right? I think people have to move out of their comfort zone. If you are in Trivandrum, go and look at what is happening in Cochin, right? At least go, a couple of 100 kilometers away and then see, or to go to, neighboring state or travel, right? Exposure is one which is missing. Secondly, not able to build or navigate through the network of vendors, advisors, right? In many cases, so I have a recent experience of 10 years working here, and many cases, I have seen that because either they don't have an advisor or a good, sounding board, and that, in many cases, I have walked away from, signing up on an investment because it was not making sense for me. And if you are not aligned with the, investment thesis, I'm not going to break my head because my fund has a life. Right? You are there for perpetuity. You have to build, may go IPO, but after 7 years, my investors will cheat me away. So I think people need to get exposed, identify your weaknesses, which you can overcome by meeting right people, building a network, mentor. And one thing, I would strongly suggest, never ever give up reading. Right? Keep updating yourself. Many a time people, miss out on updating on areas, beyond their own expertise. But I think updating yourself is very important.
Very well said, Anil. I think that's another takeaway. Anurag, last question because due paucity of time we need to close it sooner. How do you balance the need for a rapid scaling with the ask for a sustainable development and growth within startups, and how should they balance it out in your mind?
It's a very tricky question. Look, I mean, the whole promise of venture capital is that you are going after scale, and you're going after a certain space. And I think it's a bit of a fallacy to say that just because you're growing fast, you're not sustainable. Just as an example, I invested in a company which was pre-revenue stage 4 years back. Today they do about $150 million in annualized revenue and 65% EBITDA. Right, so that's growing fast and that's very, very sustainable. There are certain models which are not sustainable, and it's important to be honest with yourself and not scale when it's not sustainable, right? So I think it's not that scale is not sustainable, it's just that more often than not we end up scaling unsustainable models, which you have to, have that honesty to,
Conscience has to be clear.
Yeah, I mean, it's not even about lack of conscience per se, right? I mean, it's just you're building a company for a decade or 2 decades or 3 decades, right? So while we talk about scaling very quickly, it doesn't mean in year 1 you have to start scaling. Take 3 years, get it right, and then start scaling, right? That matters. Right? We've seen many examples of companies where the economics are not sensible, they start scaling, and we all know the economics will never be sensible. There's an end of the line for that kind of stuff. But we have multiple businesses in our portfolio that are growing 2x or 3x year-on-year with profitability. That's very much achievable. Anyone who tells you it's not achievable hasn't seen enough of businesses that are new. So get fundamentals right and then scale. That's very, very important.
That's very well said. Do you want to add something to this?
Can you repeat your question?
So how does the startup founder balance the need for a rapid growth, because that's your ask as a venture capital, but at the same time be sustainable?
I think keeping eye on your cash flow and not growing too thin, because I think many cases, many founders miss out that they are actually serving 16% of the population in India, and all of a sudden he will come and say, fine sir, I want to go to US. I said, why? Your revenue is less than 1 crore, you have not even served 5 kilometer radius of your own own city, why you want to go to US? If you have to go to US, then have product built for US. Only because your neighbor have got some success, want to go to US, and you also want to go, I think is not right thing. Second, if you have raised money initially when you have some capital, make some mistakes, do some experiment, right? Because those mistakes can still be corrected if it has been identified. But many cases, people go with their thesis and then they think they need a change and then they don't have a capital to sustain those, right? So focusing on what market needs, then what I want to sell. If you manage that and your cash flow, I think investment or growth or sustainability is never an issue.
That can be balanced out.
Of course, yes.
Alright, I think that's all. Alright, audience, that's your time to shine. Wear on your hats of Sherlock Holmes or Oprah. Please ask questions in case you have for the panel.
Sound check. Rohini, I'm afraid you might have time only for one question. If you can take that quickly.
Sure.
Yeah? Is there anyone who has a question? Just raise your hand and a microphone will reach you.
I think the panelists were extremely clear. Nobody has any questions clear.
I know.
No, I thought about it.
I request you to present a token of our appreciation to both the panelists, starting with Mr. Anil Joshi, Managing Partner of Unicorn India Ventures. I request the moderator to present the memento to Mr. Anil Joshi. I request Rohini to present the memento to Mr. Anurag as well. That entire set of mementos is for Mr. Anil, and can you present this next set to Mr. Anurag? Yes. These are personalized gifts, so we want to ensure that everything reaches the right person. And I'd like to call on stage Mr. Pradeep Prabhakaran, Director of the High Court IT Committee with the Government of Kerala, to present our memento to Ms. Rohini Nair, our moderator.